So this is a very interesting topic, and trade finance is very close to my heart because I've been a trade finance banker for the last more than 29 years. So very interesting topic, and what a galaxy of people to talk about trade finance, all the trade finance practitioners in different way altogether. So I will ask each of the participants to introduce themselves, and starting with Ajay.
So thanks, thanks, Ketan, and of course, pleasure to be here, and very august gathering. So thank you so much for inviting over. Uh, Trade finance again very close to my heart as well. It's something I've been also doing for almost 28 odd years. So very close to heart topic. And from an India perspective, having worked with both multinational banks and private bank, now for me, trade has been very fascinating. India by itself is a very fascinating country for trade. Almost $100 billion of remittances, $750 billion of imports, $670 billion of imports. For exports. It's widely it's an area with huge potential, and again if we look at it purely from a fintech ecosystem, most of these volumes that I spoke about has been largely going through banks. Fintechs thus far have had a limited role to play in this, which hence brings me to say that it's actually a huge opportunity for fintechs to innovate, because largely the innovation has happened around payments, lending, investments. Trade has still been largely unexplored. So I think over the course of this discussion, we should be able to identify a lot of opportunities, given also that the government has been spending a huge amount of public digital infrastructure for innovation to happen in trade finance. So look forward to the discussion.
Thank you, Ajay. Divyesh, over to you.
So I can't match what Ajay just said. It was really, really long. I think he covered almost everything. So look, I think thanks for kind of inviting me today, and good afternoon to the audience as well as the panelists. I think it's great. The only thing I'd like to mention out here is that for all the stuff that's going on in the track 1 and track 2 and the other rooms out there, I think unless and until you have the raw material to run your business, everything doesn't work, right? Whether it's ONDC or anything. So that's why trade finance, in my view, is most important. Whatever you do, you have a fantastic channel online, offline, ONDC, Amazon, wherever you are. Unless you have money and that's through trade finance, you will not be able to run your business. So therefore, I think this is the most important panel for the day, in my view. That's it from my side.
Thank you, Divyesh. Ankur, over to you.
I love how Divyesh sold this panel. So we don't need to do anything else now. But thank you, everyone. Thanks, Ketan, for having us here. A quick introduction. I am the founder and CEO of CashFlo. We are a platform for B2B payments and supply chain finance. We've been around for a little over 4 years now, and we've been handling roughly 20,000 odd crores of invoice flows on the platform over the last few years. It's a fascinating area. I think there's just so much innovation happening. I'm super excited to hear from the fellow panelists as well.
Iyer.
Hey, thanks, Ketan. I think as I was just up on the stage some time back. So I'm the founder of Vayana. We have been focusing for a number of years. I spent 29 years, unfortunately or fortunately, on this field. But I think the key thing, I think Divyesh put it out, no money, no trade. I think that's what really is fascinating about it, that without it, you can't really kind of do any trade. We have done about close to $20 billion so far of trade financing on our network over the last 5 years. And every day, I still kind of try and figure out what we do that can make it a little easier for everybody to kind of access financing for the trade. So I think great to learn from every one of them what the challenges and the opportunities are today.
About me, I'm Ketan Gaikwad. I manage TREDS platform, which is Receivables Exchange India Limited, which is a joint venture of Citi and NSE. And this platform actually has brought about a revolution in the country, where you talk about the digital financing of the invoices, the digital journey, which is so much unheard of. And we were representing even to the G20 nations, we were called, just to showcase. Just to showcase the prowess the India's prowess in terms of financing of the invoices, in terms of inclusion, financial inclusion, the reach to the lowest sector, which is the MSME sector. We were called by the government to represent it to the G20 nations on how exactly, what is the change, what is the innovation which we have done, and how that can affect those other nations also. So this is something, we need to be proud about, and we need to talk about a lot more about it. So coming back to trade finance, I'll just add on to what Ajay said. India has witnessed a steady growth of exports in the last so many years. In FY22, India contributed to 5% of global trade with 757 billion of imports and 670 billion of exports. So exports have been considered to be an important pillar in India's ambition to become a $5 trillion economy. And there is a Standard Chartered report which very clearly says that India is going to be the driving economy for the Asian countries. So India is going to drive the economy, especially for the export part, and the growth rate would be something like 7.6%. And of the survey done by Standard Chartered Bank and PwC, very clearly it stated that 38% of the global corporates currently do, 38% of global corporates currently do a plan to manufacture out of India. So just to touch base about what trade finance is all about, it's basically, the open account or a documented trade. But when you talk about open account, it's 50% of the global trade. And that's where we feel that the banks will add value. That's where we feel that the fintech arms will feel the value, or will add the value. And actually, when you talk about the banks also, we feel that the banks can actually, there's a huge lot potential for the trade finance practitioners or the trade finance fintech companies to partner with the banks and see how they can, go to the lowest denominator, especially in terms of digital financial inclusion. So yeah, so my first question to Ajay is all about, look, how do you see transaction banking and more specifically trade finance evolving? In the last 3-4 years, you've seen a lot of evolution coming in terms of transaction banking. And what role do you see fintech playing in this space?
Good. I'm actually glad you said, at least someone in the forum said banks add value. Because generally when you come to a fintech forum, it is all about कि banks archaic hai, traditional hai, इसीलिए हम हैं. And so I'm glad at least, someone said.
I'm a banker.
Good, thank you. So, but anyway, having said which, and so there are two parts to your question. One is the transaction banking space, which is more cash flows, and trade related. And the second, specifically, you mentioned about trade and how can fintechs, play a role there. So it's a very interesting question. And overall, but let me address the transaction banking space. Essentially, transaction banking, to put it very in a layman language, is managing of receivables and payables and, structuring solutions which bring in operational efficiencies and financial efficiencies, for customers and ecosystem partners, through solutioning. And more recently, it has been a lot of digital solutioning. So this space, by nature of the business, obviously has seen a huge amount of innovation. And I would say that, change is actually a constant. It's a very dynamic space. Regulations keep evolving, needs keep evolving, and hence banks, customers, any ecosystem partner will need to keep changing, to cater to requirements here, right? And to my mind, I think around 5-7 years back, when with the advent of API banking, I think had been the moment where actually transaction banking, completely changed paradigm, right? With real-time, instant gratification, you could see that not only banks, but more importantly, fintechs, developed a lot of solutions by which they could go solve for friction areas for customers and develop, very, very interesting use cases. We saw payments suddenly evolve. Government created public digital infrastructure. UPI, as a product was launched, by NPCI, Reserve Bank. But the entire partnership between banks and, fintechs, through the API rails, I think created the whole innovation that today, we see a lot of success, right? Same now, can be said for use cases around investments, around lending, and, many, many more such use cases. So I believe that this, this space will continue to see far and more innovation, within the transaction banking vertical. The second part to your question, Ketan, and I think that's really where I think the holy grail has not yet been touched, which is trade finance supply chain. I would like to believe that today, and I mentioned some numbers in the starting, and most of those numbers, the volumes are today going predominantly through banks, right? There has been very less disruption which has been caused by the fintech ecosystem, and I believe that is where the opportunity is. Supply chain, and courtesy these two gentlemen and many others, has seen actually a lot of disruption, a lot of innovation. But trade finance as a vertical, I believe there is a lot of innovation which can happen. EDPMS and IDPMS data, which is Reserve Bank's import-export database. I think there is a lot of that data can be actually used for a lot of use cases around lending and FX management and so on and so forth. There is also GST data which is there, e-invoice data which is there, which can also be curated around more cash flow based financing by banks and by fintechs. Threads, of course, has been a very unique and very successful model, and I believe the numbers are month on month only growing. So this is a space which I would say we should watch out for more innovation to be co-created between banks and fintech partners.
Yeah, so just to add on what Ajay is saying is, look, how the fintech has changed the world, how the fintech has changed the trade finance area. So I come from a traditional bank, and when I joined the Trades platform, the onboarding process was so manual that it used to take 15 days for us to onboard a single supplier. Now today, within 40 minutes, we can onboard a supplier. Why? Because we have employed the fintech partners over there. We have employed the partnerships with the fintech companies where we can onboard it in a jiffy. Within 30-40 minutes, we can do the onboarding of the supplier. And that's, mind you, it's completely KYC compliant and due diligence compliant. So that is what the speed is, that is one of the use cases which we have. So my next question is to Ramaswamy, Iyer. So Vayana has emerged as a major supplier financing, the supply chain financing entity. What is Vayana doing in terms of increasing its fintech capability so as to be more inclusive in its reach to the MSMEs and the other corporates also?
Yeah, I think if you look at India, I don't think a fintech's role is to be a bank. I don't think it's even distribution as much. I think the biggest challenge in India is access to affordable finance. And if you take the 30-40 million enterprises that are about 90% of this country, then they all probably have net margins of about 2% in their business, which means they can afford probably not more than 60-80 bips on their credit cost. That is unfortunately not the cost of financing available to them. Their cost of financing is what I guess the big industry guys get it. And I think the key challenge that we have, and I think Vayana, CashFlo, all of us, and the banks, is how do you get the liquidity to these guys at a cost that makes sense to them and can help them grow the business. And I think a lot of it actually starts with credit education, not actually giving them credit. You have to help them to manage their business better before you can offer credit. And I think that's a key thing. Today, if you get into an operation theater, unfortunately, the first thing they'll figure out is, are you ready for an operation? I think credit is an obligation. Being free with credit is actually dangerous at the smallest segment. You really need to kind of make them ready for credit, and I think that's really the challenge and the opportunity for fintechs like us, is can we help them to kind of manage their business better, can we help them to grow their business, increase their net margin a bit, before we bring credit to them. I think that's the key thing. Then you have responsible credit, then you will have all bankers like Ajay and Divyesh wanting to really lend to them because the cost of financing is less. I think that's really the role we are at least trying to play over the next few years in our journey. Right now, where I gave you very nice numbers, 20 billion, that's all the low-hanging fruit that everybody does. It's not really the complicated part of the journey. I think the real complication is when you start looking at 30-40 million enterprises that are all less than 10-20 lakhs of turnover yearly. How do you kind of get credit to them? It's a long journey. And I think that's what we are preparing ourselves for.
Yeah, so you've touched upon a very, very important aspect of accessibility. Accessibility to the lowest segment, which is the MSME segment, and getting the credit to reach them. So coming back to, the Divyesh. Divyesh, my question is that, DBS has just recently finished the integration of Lakshmi Vilas Bank. And how do you see the integration helping DBS reach the trade finance to the remotest location, because we all know very well that the LBB has a lot of branches all across India, and which earlier was inaccessible to DBS because DBS was just limited to the metro cities. So do you think the digital platforms or the the fintech platforms could help you, or they're helping you in this case?
Yeah, so I think a couple of things. First is the acquisition in terms of I think the network definitely helps. There is no doubt that, access to tier 3, tier 4 markets indeed helps. And, I can't agree more with what people have said right now is that I think the need for credit is more on MSME than anybody else. I think everybody out here in the audience as well as the panelists will agree that the anchor manufacturers anchor buyers have no issues with respect to obtaining credit, right? So the top 100 companies in India never have an issue in terms of obtaining credit. The cost of capital, the cost of debt also is extremely low. So actually it's the MSME which is a big issue. And I think the spreads also are not, bad at all. I think the other piece, which I don't know whether people have noticed, but yeah, actually if you go down even the SMEs and MSME routes, you will see even if default is there, it's not, the character is not an issue, right? So the biggest thing you learn in credit is how to assess character, right? The smell test of the borrower is most important. You will have issues around, cycles in business and therefore you can't pay, but that's like ability, right? The willingness is never an issue. So I think at least what we've seen is over a period of time that wherein you're able to connect, the supply chains better and industry segments, like right now auto is just going through the roof across the board. You touch any tier 3, tier 4 manufacturer, they'll tell you they are not having an issue with demand, they have a massive issue on execution. And whatever amount of money they can borrow, it's just great for them, right? So actually if you see, it's just fantastic time for the country. I think next couple of years will be very, very good from an auto perspective. So that whole supply chain on auto, whether it's Maharashtra, Gujarat, Chennai, all of those will boom, and even the north side. So I think you will not have an issue around that at all. So if you can get credit to these guys, and the whole supply chain is anyway going to get oiled very well, right? 9 lakh vehicles are going to go off-road just by the government because of the scrapping, right? So all of that has to hit the market, right? So it will hit tier 3, tier 4. Once it hits tier 3, tier 4, they'll need credit, and once you can give credit more digitally, I think it'll help. So that's first. Second is, so access to the supplier in tier 3, tier 4, great because of LBB. Second is, will we leverage, partnerships with fintechs? Of course we will, right? It just helps us get there closer, faster, right? It definitely, there is merit in doing that, right? And we have lots of partners, right? Not one, I think lots of them. We have, right from guys like Odex and shipping to we've done Tally ages back, and it's just all over. And we were just discussing, I think half an hour back we were just discussing outside with Rajan and me that I think the issue on MSME is not that they want to get digitally very, very savvy, right? It's not that they want to go to APIs or blockchains immediately. All that they need is money, right? Fundamentally, if you go down and ask any guy, the only thing they need is money because they want the working capital to churn faster, because they don't get paid well, and when they get paid faster by the anchors, they get hit by 15 to 18% interest, right? That's not good. That's not good at all, right? But unfortunately, that's where it is going. Most of the anchors actually hit so badly that these guys have to go ahead and avail credit from some of the anchor platforms, right? But unfortunately, it doesn't work well for them. So if there is an institution, whether it's a bank or a fintech, which can go and lend to an MSME, I think it's brilliant. The opportunity is just like mind-bogglingly high, right? If you have the appetite to go and assess credit on supply chains where you're comfortable, in segments where you're comfortable, I think it's just very, very good, right? So I think the overall in sum and substance, we see a lot of upside in partnering. We see a lot of upside in MSMEs. And right now the country, especially on the auto textile side, what it's going through, it's just phenomenal. I don't think I've heard this kind of stuff in the last decade from MSME manufacturers in the country, where demand books are like just going through the roof. They are 2x, but execution is a big issue. Most of them are going to, have capacity expansion over the next 6 months to 1 year. I had never heard of that, right? So I think it's just fantastic time. So right now, if anybody can reach out to them, there is money on the table, for sure.
Yeah, so this brings back to the question, the chief economic advisor also talking, the biggest strength for India is the consumption story, that, you touched upon it very clearly that, look, there is so much of demand is there, but that needs to be met. And that's what it is, and we require liquidity for that. My question to the fintech supplier, fintech provider would be that, as a digital fintech provider, where do you see the opportunities in trade finance, and where would you want to work closely with the banks? And you have two bankers listening to you.
Look, I think obviously opportunities are many. The way I sort of look at the market, right? Of course there is cross-border and there is domestic. I think there's enough on the cross-border side that needs to be solved for. Like you yourself said, 50% is still open account. Even domestic though, right? If you just look at it from a payments perspective, right? There is roughly around $11 trillion of money that moves in the country, between businesses. And when you start taking a supply chain lens, right? If you take, let's say, an FMCG supply chain, right from the time a consumer pays a retailer, and then that money keeps sort of, cascading back to the OEM and then to the suppliers. I think today a lot of the problems are being solved at the anchor OEM and their tier 1 supplier or their tier 1 distributor level. I think the next wave of opportunity is actually going 1 or 2 levels removed from the primary anchor. And that's where you start unlocking SME to SME supply chains or SME to mid-market supply chains. And I think the challenge up until now has been that it's very hard for banks to take a call on, let's say there is an SME who's supplying to another SME, right? If you need to do trade finance there, if you need to do an invoice discounting transaction there, it's very hard for a lender to assess that transaction and the risk involved in that transaction. And I think that's where fintechs can play a massive role, where they bring in the necessary visibility into how the transactions happen, visibility into how the trade happens between these companies. And this data, by the way, can go beyond what GST provides or what bank statements provide. It can actually give a more real-time view of transactions between two businesses. I think as that infrastructure starts getting built out by fintechs, banks and NBFCs more broadly, lenders, will start being able to assess the risk in these supply chains in a far better manner. I think, and that is a role that fintechs can play very well and can complement banks very well there, right? It's not necessarily an area that every bank will want to anyway solve for, and it's a question of core versus non-core, right? And fintechs are not, cannot replace banks. We are not in the business of providing capital, but we can certainly enable banks to mobilize the capital towards these smaller supply chains where the capital need is the most, right? Divyesh, you talked about tier 2, tier 3 suppliers, tier 4 suppliers of auto OEMs. Today, the challenge is if you go to a tier 4 supplier, how do you assess credit for that guy, right? Beyond what his bank statements and his financials tell you. So, where we are trying to work with lenders, and we've started doing that with NBFCs, hopefully we can do that with banks as well, is that let's take a supply chain where it's not a large AA, AAA anchor OEM, right? Can we figure out a way to mitigate risk in that supply chain so that the SMEs in that supply chain can start getting access to credit? So I think that's one, I would say, while there are many opportunities, I think that's one massive opportunity unlock that's possible.
Ketan, if you permit, I just want to add to a point which Ankur mentioned. See, today, in today's day and age, I think the question of either or replacing is actually very irrelevant. Exactly. Because I think it is very clear that banks as well as fintechs, under the, some of the implied or explicit guidelines of the regulator, have very clearly understood that both of us need to coexist, right? And it is not only for generating business, it is also for internal APIfication, right? So banks have traditionally been saddled with maybe, a legacy core banking or legacy systems, etc. Today, it is, I don't look to a fintech only for, a connected banking or generating business or, exposing my APIs, right? I also actually look at them for internal digitization. So, for example, if we have to, transform our complete supply chain platform front to back, we actually, as a bank, did not look at building it ourselves. We actually looked at all our partners and, and evaluated, okay, where can I do a lift and shift and pick up a platform which is absolutely future ready. So it is completely a partnership model, and I just took one example, right? There are various other ways which we are looking for digitization. Divyesh also alluded to it, where a very good partnership model actually can be built.
Fantastic. So and the second, we come to the second part of it, the regulator, the government. So where do you see the government, where the government, today we see the government is taking care of many reforms are happening in terms of, and the government is boosting manufacturing in terms of PLI, then in terms of the infrastructure improvement. So, when you actually have a bird's eye view of it, these all look to be, the NLP, Gati Shakti, and many things which are happening or which are being implemented are something where you can see that tomorrow you can see a bigger picture emerging. Bigger picture emerging for India to emerge as a manufacturing economy in terms of, one plus China plus one policy or whatever it is. So keeping that in mind, my question is all about the initiatives or where do you see? So my question to Ajay is, what are the various government regulator initiatives that are being worked upon and which are required to augment the trade finance ecosystem in India?
I think you put it very nicely, Ketan. And my view has always been that the biggest disruptor and the biggest innovator in the country today actually is the Government of India and the Reserve Bank of India. I think the amount of public digital infrastructure which has been enabled and created, for use between banks, the fintechs, tech, the entire ecosystem is just astounding. Right? You start with the Jam Trinity, then you look at payment infrastructure, UPI, IMPS, you look at account aggregator, you look at Open, you look at ONDC, you look at CBDC, which has just been launched. You mentioned about the Gati Shakti, the ULIP platform, which was launched on PM Modi's birthday. I think these are absolutely transformational in terms of redefining the way trade finance can happen in the country. Right? And I'm not only alluding to cross-border remittances, I'm actually also alluding to domestic trade finance, right? And MSMEs, we spoke about. So the way a GSTN, can be unlocked, e-way bill financing can be unlocked. I think trade can be done in a very, very different manner today as compared to how it used to be done in the past. And that is where, as I mentioned, that's where a lot of innovation can happen between ecosystem partners, like the fintechs or the tech fins, banks, to actually reach out to the last mile. This is, where we can not only create financial efficiencies through supply chain linkages and cash flow based financing, but also operational efficiencies, through document digitization, right? Trade largely has been seen as very paper intensive, regulatory driven, but there is a lot of digitization effort which can actually be done. And I can assure you that, banks will not be in a position to do all of it themselves, right? So a shout out to all the players who are looking for the next new idea. There is a lot of innovation which can happen on trade. Please pick up, areas which are collateral to all these public digital infrastructure that I spoke about and create use cases, work with banks. I think there is a lot of stuff which, we can do towards nation building on this.
Yeah, so just a couple of thoughts, okay? So I think first is if you see, fundamentally a country actually, sees a massive upside in any sector if there are, basic 4 pillars which are working in the same direction, right? So the first is consumer, second is government, third is technology, fourth is regulator, okay? Consumer, technology, government, regulator. These 4 have to all work in the same direction. It's very rare that you find this, like in most markets, let's say technology has always been there, right? So Citibank launched NFC, I think Anand sitting out here, he'll tell you they launched in, early 2000 they launched, right? At Nerula's in Bangalore, if I'm not mistaken. There was a gentleman called Rajan Sumo who launched it in the early 2000, okay? But there were just some 100,000 customers or limited pilot, NFC, right? Which right now tap and pay is there. So 20 years back it was launched, but there was no consumer adoption. So fundamentally, tech has always been there, but it's the adoption which is an issue. And then the government drive and the regulatory piece, right? So like Ajay rightly mentioned, the digital infrastructure was probably missing, and therefore the private guys came in, but it didn't work. There were a digital infrastructure. and then the drive from the government side in terms of adoption and reducing cost, right? So wherever these four exist and are working in the same direction, that's where adoption is high, and that's where you will see massive uptick. If it's missing, you will see it not kind of picking up very well. So with any platform if you take, whether you take ULIP, you take Gati Shakti, ONDC, everywhere the adoption is key, right? And the consumer has to come to the party, whether that consumer is a Kirana store guy or it's individual like you and me. Now, wherever you see this working very well, you will see the demand function really kind of shooting through the roof. And I think that's where some of the ones on trade, which like say trades, etc., has picked up because of that, right? So the adoption has been there for domestic side. Cross-border will also happen on ITFS. So I think some of those will move very, very quickly. And like in case of most technologies, right? You never, like iPhone 14 wasn't made on day one, right? You went from 1 to 14. But unfortunately, people always are there to criticize, oh, you know what, we don't have the best tech platform and we don't have the best regulation. But guys, come on, yeah. I mean, Steve Jobs couldn't think of 14, 10 years back. So you got to give the government and the regulators some credit for what they've done, right? So I think we are on the right path. As long as adoption is there, you'll hit the bullseye. Whether you hit it now or you hit it 10 years down the line, doesn't matter. And you've got massive tailwinds. And like you said, you've got China plus one working for you, right? And the fact that the government is also kind of pushing it in a big way through PLIs. I don't think there's a better, recipe for success. Yeah, you've got all the ingredients of secret sauce in my view.
Absolutely. So, just to quote an example of what you said, the adoption. When the trades was launched around 5 years back, 6 years back will be completing. So 6 years back, the adoption was not there at all. There was to be a skepticism about whether the people will adopt it, whether the corporates will adopt it, whether the corporates will find to come, to come on the platform, whether they'll find it easy to come on the platform. But over a period of time, just to quote an example of our company, where we were doing transactions worth around 200 crores every month, that was 3 years back. Now we are doing transactions worth around 2,500 crores now, 5 years down the line. So that's what the adoption is all about. And then you have the treasurers asking us that, this is a fantastic digital platform. Can we have a similar platform for non-MSMEs also? So I want to touch base on the very interesting topic, which is ITFS, which is, in field of trade finance, something new is happening in India. And this is something which is envisaged by the government in the GIFT City. And I would ask Mr. Iyer to, talk a little bit more about it.
Well, I think, Ketan, even you are. So, RXIL, Vayana, and a couple of others, we have all the license for the ITFS platform in GIFT City. And I think if I understand it rightly, we probably are the only world over regulated platform for cross-border trade. So I think that's a big thing. I think 2 or 3 things to remember about cross-border trade. I think especially if you take India as an example, and that's true of all countries, 40-50% of your exports, imports are going to happen with the small businesses. Now, small businesses to get financing for their cross-border trade, whether exports or imports, have no recourse but to go to the bank that they're banking with. Now, there is no other mechanism available to them to get finance for it. And then to get foreign currency credit, I think is a second bigger problem, right? I mean, you can get domestic currency credit, but you won't get foreign currency credit. So really, I think and I think Ajay talked very correctly that the government and regulator have been a big disruptor. ITFS, interestingly, is a completely new regulator. It's the 5th regulator in the country. And it's one regulator in which all 4 regulators in the domestic market have been combined. Second is they have taken, I think, some of the tips from the TREDS platform. They have now opened it up for any exporter, importer anywhere in the world to be able to get their trade finance through this platform, irrespective of size. And I think most importantly, they have allowed, I think, all these exporters, importers, and hopefully that is a challenge between all of us who have the license, just like TREDS had, 6 years they have taken to kind of do that. Can we make it intuitive and fast and efficient enough for really small businesses to tap this market to finance their export and import? I think factoring is the first product that's come out on the exchange, and world over factoring is an exceptionally expensive product for small businesses. Can this exchange make factoring a lot more simpler, a lot more regulatorily easier for these small businesses to tap into? I think if that's what all 4 exchanges put together achieve, I think we will see all the other things that Ajay talked about, PLI, or Ketan talked about, China plus one. And similarly, countries like Vietnam, Indonesia, all of those fledgling countries around us being able to take advantage of this platform. So I think, honestly speaking, I think all of us are exceptionally I think very optimistic that this will really kind of take off. And I think thanks to work done by Ketan and others in the trade side, I think we have a lot of pointers as to how to slightly accelerate this process and not wait for 6 years for the volumes to pick up, hopefully.
Now you touched base on the very important topic of MSME financing, because where we have large corporates, when there is a need of financing or especially trade finance, they used to go to Singapore or London or France or or to US to do the financing. But when you talk about the financing which is accessible to the medium and the smaller corporates, this is much more needed, and it's catering to the 50% of the economy. So because today the MSME exporters contribute to 50% of India's exports. So why not, have the financing at a very competitive rate? So, coming back to Ankur, would you tell me about any recent financial, fintech, modules or models which are where you have use cases in India or abroad?
Sorry, financial innovation in India?
Yeah, innovation, yeah.
So I think,
Which you've come across.
yeah, I think a lot of the innovation globally has been around payments in particular, where eventually payments, like fintechs are building these payments infrastructures and payments platforms, which then allows for lenders to embed credit as part of the payment flows. I think this is something that at least we've seen across the globe, right? It's not restricted to just the US or Europe. In South America, in Southeast Asia, we're seeing fintechs actually build really strong payments platforms. And the story is, very simple, right? Once you build a, infrastructure layer of payments between two businesses, embedding credit actually becomes a lot easier. And it's not that payment rails don't exist. It's, what can you build which is complementary to the payment rails? Either if the payment rails are inefficient, then you bring in new rails. But even where payment rails exist, can you innovate on top of that? So you have a lot of fintechs building, corporate card solutions, for instance. You have fintechs building SaaS solutions on top of payments. All of which basically do two things. One is it helps underwrite better because of, let's say, purchase order data, or, like Ajay was saying, GRN-based financing, etc. Right? So if you need to do any kind of financing there, you first need to get hold of that data at the right time. Right? So that's where we are seeing a lot of innovation happening with fintechs. And second is, of course, the payment flows allow for better collections. So, and you see that again with Stripes of the world or Squares of the world. Even in India, all your QR code-based players, for instance, the entire fundamental thesis is that, look, we will eventually provide credit to the Kirana store, and, collections can happen on a daily basis through the, QR code mechanism, or, POS-based mechanisms that have been around. So I think at least, when it comes to trade finance, I think where fintechs are globally playing a bigger role is complementing banks by building this infrastructure layer in many ways, and then that is what ends up unlocking the opportunity.
Divyesh, as an MNC banker, would you want to add any comments over here in terms of MNC? Because I remember that when I was an MNC banker, when we used to get 3, 5, 6, 7 years back, they used to tell us our head office used to tell us that this is what is being implemented, and this is what we are doing. But now it's the reverse way. I have been talking to many fintech companies outside, plus many bankers outside, and when I tell them that this is what India is doing, so you can see the eyebrows raised, and they say, fantastic, you guys are doing much ahead of the curve. So is that you also face a similar experience when you talk to your partners on the other side?
Yeah, so I don't think that's an issue, but actually anybody who, even travels to the US, you should go and meet people in Google, Apple, Microsoft. They will tell you that what's happening in India is just phenomenal. Forget the bank. I think they have never seen this. In US, in COVID times, they distributed checks to actually give, to pay to, citizens below category, right? So I think we are in a different league in my view, and people do recognize the fact that our platforms are far more robust. I don't think there is a single global bank, and it's a big statement I'm making, which will be able to process volumes that we generate in the country today. There is no bank. None of these banks have platforms which can take volumes that India generates. That also tells you that, the guys who made those platforms made for wholesale, nobody made for retail, right? So fantastic opportunity. And that also tells you that these are all archaic platforms, right? They never changed. And therefore, if you take any internet banking platform of a foreign bank, they can't take so much volume because they were never made for that. And they were in countries where the population is as size of Maharashtra. Yeah. So, I mean, it's never going to, you'll always have India as an outlier. So I don't think that's an issue. I think the challenge is only, the bang for the buck, right? How much you're able to kind of get out from the tech investment. And it's just that the grind involved in India is massive. And I can tell you on behalf of all the banks, unfortunately, whenever a customer sees the bank, they feel the bank makes money through float. So nobody wants to pay a fee. It's just, it is what it is, right? And our friends out here will obviously be able to demand a fee. But when we go and you give a bank card, Ajay will tell you he's been in a foreign and now a private bank, you never get paid a fee, right? So it's tough, yeah. It's not easy. But yeah, I mean, India is just miles ahead of the other markets. I mean, look at ONDC. I mean, just like it'll crush some of the marketplaces globally, right? It'll just crush it, right? UPI is going to crush associations in a big way. It is already done. And these are just beginnings. I mean, I'm saying this is that small crack in the wall of a dam. And it's happened. And I think UPI was the first one. ONDC is the second one. It's just going to snowball into something very big, which nobody's probably even guessed in my view.
Let me add a third one. Is going to be CBDC. I can assure you that next couple of years later, when we are sitting in a similar forum, CBDC would have transformed wholesale and retail. Interbank settlements to start with, domestic payments, and most importantly from a trade finance, the topic of this discussion, cross-border remittances. It will transform remittances, and India is at the forefront of this.
Wow. So can I open few questions? So if people have questions, maybe we'll take 2 or 3 questions. Mike.
So this is from a common man perspective. Since these are all big banks and very knowledgeable fintech platform, do you all take up initiatives to nurture the MSME channels so that there is an ease of business to be done? So do you convey them what your products are, and so these kind of channels do you nurture so that there is a more win-win situation for both the business partners?
I would ask Iyer.
You guys want to go ahead?
Appropriate.
So I think all businesses, first thing we do is try and get hold of customers who already can do business with us. And once we are finished with them, we start going to the next layer. So I think it automatically falls that we'll have to do a lot more outreach. I think what we are discovering is that while a lot of people understand UPI, they understand very few people understand CIBIL scores, just as an example. Very few people understand the agreement that they're signing. You'll get astounded that most small businesses sign a contract without even reading it, and they sign it in 2 seconds. So we can take 45 minutes to onboard them, but the signing takes hardly 2 seconds because they don't even read it. So I think there's a lot of work to be done to kind of get them there, because otherwise later on, as we have been noticing in the papers, everybody who tries to short circuit that process and tries to dump on them lending products irresponsibly, I think finally get caught out in the system. And then they cause a huge issue for the entire system. So I think it's all, fintechs like us, first thing we have to start reading the regulations and circulars that RBI puts out, make sure we understand it. And then we have to make sure our customers understand what role we are playing. We are not the bank, we are not the lending institution. We are just enabling the access to that. And then be responsible about it. I think without that, you're not going to get good practices. I think, one of the statements, I'm very fond of making is that in India, we have a lot of laws, but most of them are treated as guidelines. They are not rules and laws that we obey. And I think for starting with us, fintechs, who are all trying to disrupt and be innovative, I think we need to be a little bit more responsible about first making sure we understand the laws and then employing it, and then making sure our customers understand it before we can get to be held as responsible players. So I think it's just a matter of course. We will mature it that way, I guess.
Yeah, just to add there to Ram, I think it starts with, first of all, for any budding entrepreneur who's in the fintech space, to not think of themselves as disruptors. I think disruption, by the nature of the word, makes you take wrong, potentially wrong decisions. I think really the role fintechs are playing is the role of enablers, as opposed to disruptors. And I think sooner we accept and recognize that, I think the better the decision making will be when it comes to fintechs.
Yeah, so I just had one point to make. I think actually once you move down to MSMEs and the lower down now, they don't have big finance functions and legal functions and treasurers and all. So the entrepreneur himself is just selling, right? So like you rightly mentioned, they don't have guys to interpret stuff. So that's the first thing. Second is, you have to simplify it and tell him how you want to make payments. So actually, if you do a dipstick of all MSMEs in tier 3, 4, cities in India, I would say that less than 5% will be even on host to host, which I think most bankers and even fintechs will tell you, which probably was a decade-old story, right? They still prefer to go online and make a payment, or would go through Tally or Zoho and link to the banks. So they don't want to simple stuff. Like they don't want to complicate things with just fancy stuff on blockchain, etc. It's great, good to read, but he just basically wants to simplify his process at his end in terms of accessing finance and running his business. That's most important. And whatever he needs to know in that regard is what we need to communicate. If you over communicate, it's not going to work because that's not what he wants to hear. So I think all of us try to do that only. And in our endeavor to do that, I think we have to just give him bits of information. I think CBDC to a guy in tier 4, it doesn't matter, right? It's great for a chap in metro city. Fantastic stuff, right? It's brilliant. It's great to write in Forbes, lovely stuff, but it doesn't work in MSME. He wants to simple payments. He wants to get money on time. He doesn't get money on time. If you help him factor for domestic and cross-border, you solve this problem. He's more than happy, and he doesn't want to be 18%, he wants to be 10. You can solve these 3-4 things, I think he's happy. All this online RTGS, NEFT is very, very happy. Things are well, regarded everywhere. He doesn't want card payments because he's paying too much money. So the other piece which is more important is that all entrepreneurs in this country, whether they are, MBA in finance or they are CAs or no, they understand finance very well, right? So unfortunately, you don't have to teach them everything. They just know it. And you don't have to go down into too much of detail because everybody understands numbers in this country. I mean, it's good and it's bad for people like us, right? Because you can't kind of take anybody for a ride anymore. So that's what it is. So I think if you keep it simple, it's enough. And they don't want to know all the complex stuff, right? I mean, Chat GPT is far away, really far. So even blockchain is really far. It's good to have a conversation, but never turns into a sale in my view. That's what I have seen.
So keep it simple. Yeah, so I think the last question we'll take and then maybe...
No, we can take a couple, yeah, don't worry.
She has a timing restraint.
Time constraints.
So maybe we can ask the gentleman.
She stood up only.
Maybe we'll ask her first and then maybe the gentleman.
Thank you. So my question is to Mr. Divyesh and Mr. Ankur. Since we are talking about credit to MSMEs and responsible credit and effective collections, I would like to make the room aware that according to recent statistics of government of Maharashtra and several other governments like the Telangana state, Gujarat and Madhya Pradesh, so 6 out of 10 MSMEs who are failing to repay are usually more often than not the victims of delayed payments or the supply chain issues. So given that, today we have so many supply chain finance companies and, many bill discounting companies, etc. Even despite of all of these, there are still these problems where 6 out of 10 companies are unable to repay. I think that, again boils down to trustworthiness for institutions to even give loans to future MSMEs. So do you think there is a need for us to come together as an industry to create a solution for this problem and tackle it together, whether it be creating awareness of or establishing certain supply chain practices in MSMEs and also perhaps providing them with digital legal support if need be at some point in the worst case scenario. So what do you think could be a plausible solution for this?
Yeah, so just to answer it in short, the delayed payment issue remains a problem, a pervasive problem in India. And when the game report came in, which is the Global Alliance for Mass Entrepreneurship, which came in, which very clearly stated that 10 lakh crore is the outstanding during this period. And that is almost 0.34% of the GDP, and which remains a problem. So the government is tackling it in many ways. See, that whole thing remains a discipline issue from the corporates, because corporates are the buyers who continue to use the MSMEs as their bank. You know, I'm taking this question and answering it. And there is a TREDS problem for that. And that's where the problem is there. The problem solution is also there, that when you have the delayed payment issues, the delayed payment issues can be solved by TREDS, where the MSME can upload the invoices, the buyer has to come on the platform and get doing it. There are some enabling resolutions being passed. There is some enabling, thing is how can we make it more effective. So it's all about the industry coming together and ensuring that if they are supplying to a particular corporate, they have to insist on coming on TREDS and getting the payment done. I mean,
Yeah, so I'll just give you, my 2 bits on it. So I think first is, I think Ketan and company need to do a fantastic job, right? So they need to go after all the MSMEs in the country, and they can do it, far better than anyone else. But I think the important part is not them. So I think that the challenge is, again, right, they published the report. You should ask the guy who published the report that why don't you go and speak to the MSME? Why isn't he getting onto the platform? So there's the issue, right? The issue is that they want credit, but they're not getting credit, but they're not even aware of, RxIL equivalents. So the need is of, guys like Go Frugal or eSamuday, which was discussed in the neighboring room on ONDC, wherein you have these MSMEs who come up and engage with service providers who will actually help them get onto the TREDS equivalent platforms, right? So that is what is needed in my view. It's not that the platforms are not there, but it's just that, look, I mean, if you're a 10 crore company, do you think you have a tech resource to go ahead and integrate with RxIL? No, yeah. It's not going to happen, right? So you need a mid layer, and the mid layer needs to integrate with the MSME, and then the mid layer needs to come onto this platform. That's when it will work. Unfortunately, we are expecting the whole country to be so technologically savvy, but it's not going to happen. It never happens in any country. So I think you will have these mid layers coming in. I think it's a fantastic opportunity for fintechs who can actually create the layer, get these MSMEs on it, and then that layer itself kind of integrates with RxIL. And I think then you're in, right? I mean, MSME financing anyway, it's part of PSL. Banks would love it. So I don't see it as... So I think the failure rates will drop. It's just that nobody is solving the problem. Everybody is looking at credit, but it's not the credit. It's just that how do you get him access? That's where it's failing, in my view.
Yeah, it boils down to the adoption, what
I
you're
just
talking
saved your
about,
life,
accessibility, yeah. Yeah, so I think in interest of time, I think...
Yes. We can connect with them. You can ask the jury later, post the session. We unfortunately have a strict time limitation, so we'll have to wrap it up. Thank you for this
Thank you so much.
absolutely
Thank
power-packed
you.
session.